All right, guys, going to do another show today about something that I think is really important in all of this discussion around SVB. And that's why America hates big tech so much. I think we're seeing this play out right now in a pretty dramatic way. And I think that it actually has pretty significant impacts on what policy is likely to come and where it might leave us in terms of the long-term effects. Alex Cohen, who used to be at Twitter, says last 24 hours has been pretty eye-opening to see how many people are rooting against the tech industry and innovation. I don't know that it's quite as simple as them rooting against innovation, but let's dive in and see what you think about it. So yesterday night, it became kind of clear just how significant the impact of this Silicon Valley Bank failure was really going to be. Gary Tan of Y Combinator talked about thousands of startups, 1,000 startups just who had gone through Y Combinator being affected by this. He called it a potentially extinction level event. And you saw people really digging into how scary this was for their companies. This is just one type of story. This company had just raised $5 million, but they were no longer sure if they were going to have access to it. And he said, it seems like this is just if we bail them out, it's just bailing out the 1% or big tech, but it's not true. It's little guys like us who are just, have a dream and a hope and are trying to build something. So this is what was coming out last night, right? From Silicon Valley, from the tech industry, from people who banked with Silicon Valley Bank. And on top of this, you sort of started to see the beginnings of the debate shape around who is to blame for this. You certainly have people who are digging in deeper to the balance sheet of Silicon Valley Bank and asking whether it was sort of their fault, right? So you have Joseph Wang here who says, looks like SVB held $120 billion in securities, but didn't hedge their interest rate risk. That's crazy. In other words, it's their fault. But then you have others who really were pointing the blame at the Fed and at this incredibly fast hiking cycle, the fastest rate hiking cycle that we've seen in 40 years. Balaji Srinivasan says, we're likely to see in the coming weeks that this wasn't a single bank's issue, it was a central bank issue. And he pointed out that 4 days ago, the FDIC chair said that most banks are suffering from unrealized losses. For those of you who haven't watched my previous videos, unrealized losses meaning the long duration assets that they have on their books are less valuable than they used to be because of the rise in interest rates. And it's not just these sort of, banks that are servicing companies like tech companies or crypto companies in the case of Silvergate. It's all banks, right? And this chart has been going around a lot on Twitter showing that just how extensive, the shift from unrealized gains to unrealized losses have been. You have folks like Naval who are pointing out that if these small businesses, which is what startups are until they become big, are ultimately lose money on this, every business is going to move everything over the $250K FDIC insurance limit into treasuries. And that will create, as he says, a system-wide bank run at Twitter at Twitter speed. So you have all these interpretations starting, but there's another thing happening at the same time. And this is the phenomenon that's at the center of this video. And that's the idea that people really do not like tech. And that's the narrative that's sort of dominating the mainstream coverage of this event. So Robert Evans writes, so here's what happened. There's a bank in Silicon Valley that funds all the gambling tech weirdos did in the low interest rate years. That bank made some bad bets that the good times would continue. Now about $160 billion in the richest people's deposits are unsecured. I mean, there is so much to unpack there, right? All the gambling tech weirdos did, bank made bad bets, and now $160 billion in the richest people's deposits, right? So these are rich people who are tech weirdos who made gambles, and then they banked with a bank that made bad bets. A lot to unpack. He reinforces it. At the moment, we are looking at a run on the chief bank for rich gamblers. In other words, the implication is, screw you guys, you had this coming. And this guy, Robert, who I have no idea who he is far from alone on this. I mean, the versions of this, if you go on Twitter, are literally endless. Anyone who tweets about or says anything like it would be terrible to let these startups all fail and a random chance is getting tons and tons of comments that basically say, screw you. So Austin, who's at the Solana Foundation, writes, watching people delight in the collapse of a bank that's been vital to the greatest wealth generation engine this country has had for the last 2 decades is really disheartening to see. And then Lauren, not a big jerk, responds, seems like a good opportunity to realize a lot of regular people are resentful of that, quote, wealth creation engine because it was run primarily for the benefit of insanely elitist and arrogant people at the expense of the rest of the planet. Austin tries to clap back, saying the Patreon link in your bio used to clear through SVB before those funds got to you. No idea if it still does, but stuff is interconnected. Lauren, not about to back down, says, I knew you'd have some kind of dipshit response about how we are all tied to the VC economy as if there was no way to hail a cab before startups came along. You set up virtual middlemen on every service you could and act surprised when people don't worship you for taking a cut. VC won so completely in the financial environment it built for itself that it's heretical to imagine the last 20 years could have evolved differently. But it all comes back to a bunch of rich dickheads looking at the promise of Web 1.0 and going, how can we enclose those commons? Now, for one, I would say I do not want to face off against Lauren in a sparring ring. She is a good writer. But I think that the sentiment is obviously much more important than just the quality of the language used here. And it's really important. And I think even if you disagree with everything else that Lauren said, this part where she starts seems like a good opportunity to realize and reflect on the feelings of other people is kind of what the point of this video is. And I will be clear that I have no particular expertise into this issue, but it is something that I've watched for a long time. This change in how people think about big tech. And I do believe that it's going to have pretty big implications around the contagion risks and the long-term growth of America, and moreover, just the sort of social fabric of America. So what we're going to use the rest of this video to do is actually explore why tech fell so out of favor. Like I said, I offer no guarantees that this is all right. This is entirely just my own thoughts. And by the way, this is not at all comprehensive. I think it's important to note as we dive into this that tech wasn't always reviled like this. For a very long time, tech was the industry that was seen as something really exciting, seen as a higher trusted industry than other types of industry. And then something started to shift. It started to shift around the early teens. And I think that there are potentially a few reasons we could try to understand why. So one, I think, has to get back to the global financial crisis and just the interpretation thereof. Now, global financial crisis was not really about tech. In fact, it was about banking. It was about a whole different set of things. But what happened in the global financial crisis, if you want to be really reductive about it, is that there was no real consequences for the set of global financiers who ended up creating the situation. And in fact, as this cartoon says, the guy with his head down, by the way, on his back, it says the poor, he has someone castigating him saying, this is all your fault. You bought a house you couldn't really afford. This obviously gets to the idea that the subprime mortgage loan crisis was at the heart of the global financial crisis, which is sort of only very partially true. But anyways, the point is that the global financial crisis and its aftermath left Americans, I mean, it left the world, but especially Americans, with a lot of additional resentment around the elites and institutions. And on top of that, it gave us super low interest rates, right? The way that the world, or the economy rather, was reconstituted in the wake of institutional failure was a reconstitution that benefited people with money and assets, financial assets, far more than regular people, right? You had a huge lag for for employment to come back online as compared to how fast sort of the markets came back online. And this was a legacy that was, deeply problematic for people's sense of trust in institutions, trust in financial markets. But it was also something which turned tech, which at that time, at the time of the global financial crisis, was just starting to crawl out of the hole of the dot-com bubble, was just starting to invent the first sort of shades of social media that would go on to dominate so much of the next decade. And it turned that sort of amorphous early contender into the global powerful institutions. And I think that there is a direct relationship between how big and how fast tech grew, fueled by cheap money with venture capital and more institutions having to get into the venture capital asset class. So trying to sum this up, the global financial crisis didn't have a direct impact on tech initially in terms of tech trust, but it did make us hate institutions. And it also set up a low interest rate environment that was likely to make tech the next great wave of institutions to hate. Okay, so that's one piece of it. Now, there's an obvious, I think, social aspect of it as well, in the sense that around this same time, people started to think to themselves that maybe this technology wasn't that great. It wasn't something that they were sure or clear was really improving their lives. In fact, a lot of social media might have been starting to make them feel worse, or at least have a gnawing sense that they were the product in some ways. And ironically, given how much sort of this group hates him now, but Peter Thiel's manifesto, the Founders Fund manifesto, we wanted flying cars, we got 140 characters, I think sums up some of the challenge here. Where all of that new cheap glut of money flew to wasn't big world-changing innovations, although we could talk separately about Uber and convenience and all those things. It was instead towards these social media platforms, which were ultimately just better places for advertising. And now I think it's overly simplistic to blame sort of a big rise in depression on social media exclusively, but there is a lot of research showing just how dramatically rates of depression, reported rates of self-antipathy have risen over the last decade. And you can ignore, for the purposes of this conversation, all of the by gender and politics. That's certainly not the important point. The important point is that across all of these groups, the trend line is very clear, that sort of rates of depression among young people have gone up. And a lot of people's, primary calculus or primary, blame goes to social media. It's the biggest shift during this time. Even if you don't attribute it to all that, like I said, I think there's certainly been, over that period of time, a shift in the extent to which we think tech is beneficial to us or not. And then we get to what is perhaps an even more important point, which is the 2016 elections. And this, I think, is actually quite significant. You had, at that time, the first real chance for people to express their frustration post-global financial crisis. And unsurprisingly then, perhaps in that light, you had two absolutely insurgent campaigns on either side of the aisle. On the Democratic side, you had Bernie Sanders, and on the Republican side, you had Donald Trump, his Make America Great Again, his Drain the Swamp. These candidacies were both rooted in the unbelievable frustration that regular people had coming out of the global financial crisis. And I think you could extrapolate that back to the larger globalization era that traded cheap stuff and cheaper services in America for jobs that were shipped overseas. And I think we're going to spend a lot of the next decades litigating how bad or good those decisions were. But the fact of the matter was they happened, right? And so you get this election that kind of crystallizes this cultural anger that's been brewing and bubbling for, going on 8 years at that point. And interestingly, in the wake of it, you have new reasons that both sides have to hate tech even more. On the left, tech, specifically Facebook and Russian bots, are blamed for Hillary Clinton's loss of the election. In fact, the Democrats spend so much time blaming that they don't introspect on whether it was their choice of candidate or not. Now, on the right, you have a totally different thing happen, which is the right starts to get it in their heads that all of these platforms are systematically deplatforming conservative voices, and they are not they're inhospitable. They are hostile to conservative voices. And so these huge sources of power are actually stopping conservative voices who they believe represent a huge part of America from sharing their message, which seems fundamentally unfair. It seems unfreedom of speech like. And the point is, regardless of which of these sides you find yourself more on or neither on, it doesn't matter. The point is that the culture war, which eats everything in America, has now eaten technology as well. And interestingly, most things in the culture war don't suffer this. The culture war, either side, both sides, hate technology just for different reasons. So you've got this, again, brewing anger that's built up all through the teens, this increasing skepticism of the actual significant value that these things have added to our lives during this time. And then you have the culture war feed into this antipathy, animosity towards technology. And so tech is already so on the outs by this time. And then boom, another global phenomenon happens in COVID. And who benefits most from COVID? Yet again, it's the technology barons who are in a position to reorganize the world around delivery and work from home and low interest rates. And we have this boom, this sort of 2-year period in which all the stuff that was happening during the teens gets hyper compressed even more into this fast period of COVID. And as much as it would be tempting to say, yeah, but like, wasn't it so cool that all of a sudden you could work from home? That was enabled by tech. Tech had burned through so much of its goodwill at this point that people weren't thinking about the fact that they had all these cool new tools. They were just thinking about the fact that they were farther and farther behind, and tech people writ large and tech companies seem to get farther and farther ahead. Now, this, I think, gets to another point, which has to be brought up, which is that which is the feeling, the sense of generational malaise that is beyond and bigger than just this anger towards tech. There is a fundamental sense among millennials and younger generations than them that they are worse off than their parents' generation, something that has never happened or has not historically been the norm in modern American society, that they are worse off, that things are harder for them, and that the life that their parents had looks better than the one that they had. And there's a ton of reasons for this. I mean, there's obviously an enormous amount of research about this as well. But I think that there are real reasons to at least not dismiss it out of hand as just the sort of whimsical fancies of a soft generation, right? This chart has made its way all over the internet, and it's the share of national wealth owned by each generation by medium cohort age. You see the baby boomers way up here at top. You see Generation X, and then you see way behind millennials. And this was 2019, but the feeling is that the process that created this scenario has done nothing but get worse over the last couple years. And it's particularly acute in areas like housing, where people are just so sure that they're never going to be able to buy a house, which has been so sold for so long as the marker of you having made it and as the thing to build wealth around. And those dreams being deferred, being pushed aside, leave this broader negative taste in younger people's mouths that makes them angry. And so tech becomes just sort of swamped up in that as well. And so I think that brings us back to this question of the Silicon Valley Bank and where we are now and why people are so angry. And I guess what I want to say about it is that I think the reason that this is significant or matters is that this sort of seething anger in this case isn't something that can just be dismissed, even if you believe it is completely misplaced, even if you believe that it has no appreciation for how significant tech is as a driver of the American economy, even if you think that it is just a media mischaracterization of what's actually going on, even if you recognize how many non-tech deposits are sitting in Silicon Valley Bank. And the reason that it can't be ignored is that this group of righteously angry, tech-hating folks have made any sort of bailout politically untenable or at least extraordinarily costly. Extraordinarily costly. And I'm certainly not arguing that a bailout is the right approach here, but it almost takes it off the table. And what that is going to do is increase the likelihood that other businesses look around at their smaller mid-sized banks, worry that they have the same issues of unrealized losses, and start to move to either just treasuries or systematically important banks that are literally too big to fail. So the point being here is we're seeing an actual example of where this incredible frustration on the part of people who are frustrated with tech makes the policy options available to policymakers and to the markets reduced for that anger. And that's different. That takes it into a new area where it's not just a theoretical anymore, but actually something with really significant impacts for the future. And I'll leave it here on this quote from Kurt Schlichter, who I have no idea who he is or what biases he brings, but he says, "I care exactly as much about the tech industry as the tech industry cares about me." I think it's pretty clear, given that I've spent my entire career in tech and crypto, that I'm not a person out here hating this industry and who wants to see startups fail for the vagaries of Silicon Valley Bank and whatever it contributed to its own downfall, combined with this incredibly fast rate hiking cycle. That is so far from what I want. It is hard to overstate it. But I do think that fundamental idea that people hate tech, and this might be a moment to ask why. Once we get through this phase of all these startups figuring out how they're going to get payroll, I think that'll be an important question to consider next. Anyways, I feel for everyone out there who's fighting through this, for dealing with it. There are lots of people out there who are trying to help, and hopefully we'll have a little bit more information by Monday about what the actual scope of the problem for depositors of Silicon Valley Bank is going to look like. Anyways, guys, I think this is obviously a little bit of a departure from some of the things we talk about here, but certainly fits in the big picture power shifts context of this entire page. So thanks for listening, and be safe out there. Peace.